I didn't know that. But hang on one second, because I got to answer some questions. There were some folks that had some questions for me about day trading. Yeah, so. Okay, I'm going to just try to answer their questions. All right, well, gosh. Happy 4th of July weekend, everybody. I thought I'd come on here and do some Q&A. So those who are tuning in live, thank you for being here. Those tuning in, watching this later, thank you, as always, for watching these episodes. I hope you enjoy it. This is going to be a pretty much like rapid-fire Q&A session, so this will be easy to watch or listen to without actually looking at the screen. So if you're just listening on your phone or while you're driving or running some errands or whatever, totally good. This is going to be not a lot of visual, mostly just the audio of me answering questions that people have. And folks already posted a bunch of questions for me on social media from earlier. I asked people to help me get started with some questions. So that's going to get us started here. And let's go ahead and jump in. Two things before I do. One, I want to remind you, as always, of my disclaimer. Trading is risky. Most beginner traders lose money. My results are not typical, and there's no guarantee you'll make money. Number two, I want to remind you that our 4th of July sales are underway right now. And if you haven't already checked them out, you're welcome to jump over to the website and check them out. There's a 40% off coupon code that you can use on either the Warrior Pro course or the Warrior Starter course. And I can answer questions about both of those if folks tuning in do have questions. Okay, so with that said, let's jump over and we're going to start with answering some questions that were posted on, let's see, we'll start with TikTok. All right, so I'm going to do a smaller video here. All right, so over on TikTok, the first question was, how tall am I? And I am 4'11". So that's my height. It's very tall. And CJ says, hi, Ross. So thank you, CJ and Noah, for the hard-hitting questions. Okay, and that's Instagram, or that's TikTok. So now let's jump over to Instagram. All right, so first question on Instagram was from Larissa, and she is a Warrior Pro member. I'm familiar with her name, or I recognize it. So, Ross, if you miss a breakout, specifically during pre-market on breaking news, what do you look for to get in on the first 1-minute pullback in order to tell if it's going to make a sustained move or if it's just going to retrace its breakout? So pre-market, we've seen, of course, as a breaking news trader, I'm always watching for breaking news headlines. And one of the things that we look for is the stock to start spiking up. So the workflow basically is my scanners are running and they're kind of like radar. So the second something is moving, beep, 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 it's going to be firing on my scanners. I pull the stock up, I look at it, I see that there's a news headline, I see it moving quickly, and sometimes I'll just slam the buy button, but usually I wait for kind of like a micro pullback. And it doesn't have to be a big pullback, but just like a momentary pullback, just like a little bit of a dip and then continuation for the next leg up. So that's usually my first entry. Now, sometimes a stock will pop up, and by the time I'm already pulling it up, it's already retracing. So then it's no good. If it pops up, it hesitates for a second, it goes higher, but I missed that entry, which is sort of the perfect entry. Then the question is, when it continues, the next time it hesitates, can I get in at that point? And so the things I'm going to look at are the daily chart, especially how much is it running into resistance on the daily? Does the daily chart still have potential? That's number one. Number two, is this a leading gapper? Do I think it's obvious? Does it have the rate of change, which is associated with high demand and low float? And if it has all of that, then I probably will buy that second micro pullback for the next leg up because I'm expecting more out of it. If the daily chart's not great, if the float's a little higher, then I might just wait for the first true 1-minute pullback. And if we end up not getting it because it just fades, then that's that. So good question there. So Tyler says, will day trading penny stocks die as crypto gains attention of small investors? And I think the answer to that is no. I think if that was going to happen, it certainly would have already happened in 2018 when Bitcoin hit 20,000, or last year when Bitcoin hit 60,000. So Bitcoin and cryptocurrencies in general right now have rolled over substantially. So like we're not seeing the rise of crypto right now. We're seeing a retracement. And since we've already gone through 2 rises without day trading and penny stocks dying, so to speak, I don't think that we have to worry about it now that we're on the backside of this current or most recent move in crypto. So I'll answer a question on YouTube here. So question was, how do I stop over trading? It's seriously a disease in this business. And I don't disagree with you. Over trading is, this is the thing. No one's going to stop you. You could trade as much as you want. You could trade from the moment pre-market starts until the moment after hours finishes. So from 4 a.m. to 8 p.m. If you want to trade that long, you can. And some people will because they're addicted to the thrill that comes with hitting a winner. And, they don't want to walk away because they don't want to miss out on an opportunity. So they're letting FOMO and those emotions sort of dictate the way they're trading. If you're thinking about this more like a business and you're being a little bit more analytical about it, then you're going to be guided, I think, by your metrics. And so I'll pull up my metrics here as just sort of an example here. So in the last 6 months, we've been in a bearish downtrend in the market. And, I've been trading through it. I've made money. You can see $500,000 here in total gains. Reminder, as always, my results are not typical. 66% accuracy, so that's not too bad. And let's look at days and times. So if you look at days and times, you can see that I am generally making all my money between 8 a.m. and 10 a.m. And past 10 a.m., a little bit of loss, a little bit of profit there between 12 and 1, and then a little bit of loss between 2 and 3, and 3 and 4. So my metrics are telling me when I should trade and when I shouldn't. It's my choice whether or not I want to listen to those metrics and, and use that to improve my trading, or if I want to just keep going with my gut and being emotional and just trading all day long if I want to. So I think you have to think about, do you want to treat this like a business, or do you want to just be emotional? Another question on YouTube, on your small account challenge, the first trades of it, did you go all in? And yes, the answer is I went all in. I went all in, 90% of my buying power on each trade when I had a small account challenge because I needed to. With a $500 account, I couldn't, you can't take a $50 trade. $5 commission, buy and sell, you would need to make 20% on a $50 trade just to break even. So you have to be willing to take that level of risk. Why can't I make money with Biden in office? Well, that sounds like a you problem because I am making money with Biden in office and I had a great year last year. However, it is true that the market is rolling over right now. It's down 20%. We had our worst 6 months in 50 years. And I think that there's a lot that we would attribute that to. And certainly politics are a big part of it. So, I'm trading the best I can during this market, but I think probably the next time we have a Republican in office, we'll see markets a little bit better. So let's see. Now back over on Instagram, Jason asked a question earlier. He said, I'd like to hear you address sizing up and down, both in bear markets and bull markets, and what indicators give you confidence to size up in bear markets or down in bull markets. So thanks, Jason. So for me, in a bull market, when the overall market is strong, that inherently gives you a certain degree of confidence, right? The overall market's strong, so you figure, okay, this is a good time to be fairly aggressive. In a bearish market, getting confident in a bearish market is more difficult. Basically, what you need to see is a stock really going crazy. And then on that specific day, I might start to get aggressive. So if I see a stock go from 2 to 4 to 6 to 8, as it goes from 2 to 4, it's up 100%. And I'm like, okay, this thing's moving. If it doesn't fade right back to 2 or 3, and it actually looks like it's going to keep going next leg up to 5 and 6, I'm going to start to scale up. Goes to 7 to 8, I'm sized in because it's already shown me how much it wants to move. And that'll be like a one-day opportunity where I'll size up for that one day. And then the next day, I'll start slow again. Now, if the next day we immediately see something start to squeeze, I'll think about this as being sympathy momentum, and I'll try to ride that momentum the same as I did on the previous day. And usually we'll have these little kind of clusters of momentum where we'll have a couple of good, really solid days, sort of back to back to back to back, and then it'll kind of cool off again, which is typical. That's bear market, typical. But in a bull market, I mean, I might be aggressive like that week after week after week after week because we just keep seeing these really big moves. All right. So another question, what were the biggest flaws in your strategy and how long did it take you to correct them? So I would say, generally speaking, one of the biggest flaws for me as a beginner trader was fear and trading fearfully. So by that, I mean that as soon as I would get in a trade, I'd be nervous. I'd be like, oh God, this could turn into a loser. And I just want to get out like as quick as I could. And if it would be green, I'd be like, thank God, I'm out. And I'd take the tiny profit. And if it was red, I might also bail on it really quickly. But because I was selling my winners so fast, my average winners were half the size of my average losers. I was not letting my winners run. I was cutting my losses pretty well, but I wasn't getting the most I could out of winners. And so one of the things that I did that really helped me was I changed my hotkey from selling full position to selling half position. So when I had that instinct to bail out, instead of selling the whole thing, I was only selling half. And that kept me in the game a little bit longer. And so by doing that, my profit-loss ratio improved. But even today, my profit-loss ratio is really only about 1-to-1. My average winners and losers are about the same. I mean, actually, the average losers are a little bit bigger this year. And that's partly because this has been a bit of a more difficult year. But if you go back to, 2016 here, it's over $11 million in gross profit. And you can see that my profit-loss ratio is about 1-to-1. $1,600 average winner, $1,800 average loser. It's a slightly negative profit-loss ratio. Accuracy being 68%, almost 69% is the reason that I've made 11 million, even with a slightly negative profit-loss ratio. But I take the winners quick, I still do. And I think that is the right approach, but I just used to do it even faster, like too fast. All right, so good question there. Let's see. So another question here, or two others. How do you trade in a bear market like this? Do you short a lot? So I actually did a study session last week on trading in a bear market. So I'm not going to that question was sort of the starting point for a 90-minute long, 2-hour long study session. So I can expand on that a lot. But in short, to kind of rapid fire get through a bunch of questions here and give everyone, I think, the most value, the way I trade in a bear market is by being very selective about what I'm willing to trade to try to maintain high levels of accuracy and avoid getting caught in choppiness. In a hot market, you can get away with trading B and C quality setups. But, in a cold market, B and C quality setups, you're just going to get smoked again and again and again. So it's going to come back to focusing on highest quality. And then Jason had another question. He said, if you can pinpoint the factors and turning points from becoming a non-profitable trader to a profitable one, and then likewise the factors from going from profitable to extremely profitable. So the first one of going from not profitable to profitable, this one for me required hitting rock bottom. I had to hit rock bottom, and I've talked about this a million times, but I hit rock bottom in the sense that I had taken the final loss in my trading account, which put it below PDT level, so I couldn't trade in it without depositing more money. I'd accumulated tens of thousands of dollars in credit card debt. I didn't have any savings. I had tried to take out a home equity loan. It got denied because I had no income, because I wasn't working. And I got to a point where I basically had to say to myself, either you start taking this seriously right now or you're done. So what does start taking it seriously mean? It means being disciplined. And, I hate to say it, but for my first 2 years of trading, I really wasn't very disciplined. I was trading, like I said before, with a lot of fear, greed, FOMO. Something would start squeezing, I would get greedy and jump in, too high, or I would get in, get out, and then it would go higher, and I'd get back in, and then I'd lose. And I had a hard time staying focused on what I really actually needed in order to pay my bills. Living in Vermont in my 20s at that time, $1,000 a week was more than enough. That's $200 a day, $250 a day, $300 a day. That should be a great day. And I was having $3,000, $4,000, $5,000 days from time to time. But then I'd have $6,000 and $8,000 losing days. I was going way too big. So I had to kind of bring it way back down, focus on basics, And the only reason I did that was because I was at rock bottom, and I felt like if I didn't, I was going to be out of the market. So let's see. And then, answer that question. Let's see. Gladly provide proof if desired. I have a 96% win rate on paper, 80% win rate on my actual account, 6-month period. My question is, will you be my accountability buddy? Okay, so I can be your accountability buddy to the extent that you can post every day, if you'd like to, in our community. If you're a Warrior member, you can post on social media and do it in that way. I'm not doing one-on-one mentoring, and not many people will. The fact is, it's not really efficient use of our time. If you're someone that's really experienced in trading and you want to try to help other traders, one-on-one, you might be able to help 10 traders. Whereas if I can create more of a learning path that requires you to be a self-starter that you can go through, I can reach thousands of traders. So that makes more sense. And it's interesting that you're having a hard time with the emotions. This is, I guess I say it's interesting. It's not that surprising, really. It's the most common issue that people have. You've got great metrics, though. 96% win rate on paper, 80% win rate on the actual account, but that doesn't speak to the profit-loss ratio. And there's a good chance that it's negative because of that emotional stuff. So I can help share with you the strategies that I use to combat emotion in trading. And I've gotten to a point where, I think there's room for improvement, but I'm happy with where I'm at right now. So another question from Instagram. When using your scanners, do you stick with a particular setting or do you frequently adjust to the ever-changing market conditions? Good question. I have a set of scanners that I've used for a long time that I really don't change at all. Maybe once every couple months I'll make some very minor change, but I don't change them much, and I don't really want to because I've used them for a long time. I have confidence in them, and if I start changing them, then I might not have as much confidence because I'm a little confused by some of the alerts that it's giving me. However, what I'll sometimes do is I'll work on a separate scanner. So I'll have a separate one for a certain market condition. So if we're noticing, for instance, recent IPOs are really, really strong, I may set up a scanner specifically for that setup. Or recent reverse splits are really strong. Or special acquisition companies. I can set up scanners for those specific types of setups that we've been seeing a lot of, and to use them for a period of time, and then when they're not working anymore, I just put them on the shelf and then come back down the road. Max says, you trade with over 65% win rate. What setup would you say trades above your average? Well, that's interesting. I feel like I probably trade at my highest accuracy in those first 2 hours of the day between 8 and 10. And then the same setups that I would trade between 8 and 10, trading them between 10 and 12, my accuracy will be lower. So I think that actually, if you focus on time more than setup, that would probably be the better approach. I would only be guessing to say what my accuracy is on individual setups because I don't track that metric. I did it at one point when I was still trying to figure out what setups to focus on, but I don't do that at this point. Let's see. Question about Warrior Pro. What kind of pricing plans do you offer? Is there a way to do a monthly payment plan? You guys, of course, watching this, you could see the two specials that we've got going on right now for 4th of July. We've got the Warrior Pro, 40% off, and the Warrior Starter, 40% off. Let's see. I don't recall with... I think you may be able to use PayPal credit with the Warrior Pro 1 year. And if you use PayPal credit, you could do monthly payments with PayPal credit. But that would be the extent of it. Let's see. Pause that again. All right. How do I size into a position? Starter, taking profits, etc. Well, it kind of depends. In a colder market, I'm not going to go in with like 50, 75,000, 100,000 share positions very often. It's going to be a lot of 10 to 15, 20,000 shares. So in this market, I might go in with a starter of 8 to 12,000 shares pretty much right away, which is like half size of what is full. and be up at full size very quickly, and then take some profit off the table. In a hotter market, I would probably still start with that same 12 to 15, maybe 20, and then scale up. But I'd have a lot more room to keep scaling as the stock keeps going higher, because we're just in such a strong market that they keep going higher and higher and higher. So, so scaling for me, I'm going to be just more aggressive in a hotter market with going up to a bigger full size, and in a colder market, sizing a little bit more conservatively on total size, but going in pretty quick with basically half or 3/4 size. Casey asks, is a 5% or 10% stop, 5% stop, 10% limit, a good rule of thumb for trading stocks with volatility? I don't usually think of it in terms of percentages, to be honest. On a $3 stock, 5% stop is 15 cents, 10% target is 30 cents, so that could work. Of course, on a $1.80 stock, 5% is 9 cents, 10% 18 cents. That could work as well, but you might not get a full 18 cents. You don't always get a full 10%, So 2.5% stop and a 5% target would be more conservative, but probably higher accuracy in this market, if I was going to be honest. Yeah. That's probably what I would do in this market. In a hotter market, I would probably set it further out, though, to take more profit, or to try to hold for a bigger winner. Jason says, I follow the setup pattern, but I only have 40% accuracy. Okay, so this very common. So you're looking at your accuracy. You're only coming in at 40%. So the fact is, right now, you're not good enough at picking the entry. It's a combination. It could be that you are holding too long. You're not selling quickly enough. You could ask, how many of those trades were you green on before they went red? In which case, maybe you should go try to take profits faster. But it sounds like that setup is not working really well for you. Maybe it's working well for others, but the way you're approaching it isn't right. You're not anticipating the entry. You're getting in too late. You're buying at the very, very top and then getting caught in a pullback. So, this is why you trade in a simulator. You got to keep practicing. I can't say exactly what you should do because I don't know what setups you're trading and the details behind those metrics and what your profit loss ratio might be. But I think focusing on accuracy is a good place to be, because usually profit loss ratio and consistency, follow that, and then confidence follows that, and you start scaling up. So you gotta get dialed in and figure out why your accuracy is poor, and might have a little bit of going back to the drawing board to do. I know that 2 to 20 is your bread and butter. However, I'm not starting with a small account. I took your principles you've taught me about cutting losses. Let's see. This is long. I'm not sure if there's a question in here. Let's see. So, okay. So this is on applying them to large cap stocks. So one of the things that's interesting with large cap stocks is that they don't always have very good liquidity. And you'd be like, that doesn't make sense. But a lot of them, a stock like Tesla, you can't size up in a big way on that. It moves so fast. And the spreads are so big that just instantly you're down $1.50 a share. And that's not just true of Tesla. That's true of a lot of large cap stocks that are over $50. So in reality, when I've tried trading them, I have felt like I'm taking a lot of risk because of the spread, and that to size up, I'm getting a lot of slippage going in, and if I have to bail out and hit the bid, I get a ton of slippage on the exit. Now you also have to realize that with a lot of those large caps, you are trading against some of the best high frequency trading algorithms in the world, because those are stocks that they're going to be trading. They're volatile, they've got range. So you're competing against the best of the best there. If you're doing well in the simulator, part of that could be because you don't have liquidity. You can't simulate liquidity issues in the simulator. You just get filled instantly. I would try it with real money with small size. If you can scale it up, you could do really well. But I think each trade carries a bit more risk. Now, going back to that previous question, maybe you're still within 2.5% and 5 or 10%, but you're not going to get 5 and 10% intraday moves on Tesla, generally speaking. But your stops are still going to be pretty big. So that's been hard for me. It's been my experience, and so that's kind of where I'm at on it. What's considered a good average percentage on winners? If you mean average percentage of all trades, then I would say anything above 50%, 60% and higher is good average percent for your winners. If you're talking about a percent of, like, my average winners are a 3% profit or a 5% profit, that I actually don't know what my metrics are on that. But I would guess they're probably pretty low. I mean, they're just lots of small base hits. So average winners might only be like 3 or 4%. But, you do that 1,000 times and it adds up. Okay, so longer question here on YouTube. So thank you all. Thank you for all your efforts. Thank you. Okay. Is there any calculation to figure out relative volume in a stock? And yeah, generally the calculation is the average volume over the last 14 days. And then today's volume is relative to that. So if your average is 100,000 shares over 14 days, and today you're at 1 million shares, you've got 10 to 1 relative volume. When you buy stocks, you focus on the 1 minute, more 5 minute charts, or all together? I'm focusing generally on, so when I'm pulling up a chart, I look at the daily. I have to understand the daily and where we have nearby resistance. I then look at the 5 minute, and then I look at the 1 minute. So I'm starting with big and then dialing down. Once I'm in the trade, I may start to look at a 10-second chart, or if I'm about to get in a trade, I may look at the 10-second chart, look for that micro pullback. But usually the 10-second chart is actually a better sort of a teaching tool to show you what I was seeing that gave me the confidence to press the trigger when I did it. Because sometimes you'll just see like a green candle going straight up, and you're like, why'd you buy in the middle of that? And I'm like, well, it hesitated for just a second. So I need to show you the 10-second chart for that. But really, it's the 1 minute and the 5 minute where I'm basing my trades, as long as we've got a good 5 minute daily chart. Can you make a video for former stocks in which biases we keep them? Okay, sorry. Please make a video for former stocks in which biases we keep them with us under watching them. And what signals do we follow to keep watching these stocks? So the wording on this is throwing me off a little bit. So I don't really keep a list of former momentum stocks. I have one mentally, sort of an archive in my head of stocks I know I'm familiar with. And when I see them hit my scanners, I'm usually faster to pull them up and look at them because I know that they're a stock I've traded before. But I don't have like 100 Momo stocks that, every morning I check to see how they're doing. I really trade each day based on the whim of the market of what's hot and what's got news and what's moving. We do see that former Momo stocks, come back into focus. It's very common. We see that, but I'm not watching them on a daily basis. When you set up the lines of resistance and support, you put 1 minute and 5 minute chart. So the way my charting platform works, the line goes on the time frame you draw it on. You can right click to apply it to all, but it requires the right click to do that. So I don't. If it did it automatically, that would be great, because anything I'm drawing on the 5 minute is valid on the 1 minute, or vice versa. So it's helpful if you can see it on all time frames. Your signals to buy a stock depending on resistance line. So I like to look for the break and then the retest. Break a level, retest it, show it can hold it, and then buy the dip off that retest for the next leg up. How important is level 2? Can I succeed without it? There are traders who do succeed without it. That's a fact. So it's possible. It depends on the way you trade, the type of stocks you trade, and sort of what your strategy is. I think generally most traders are going to be able to make better decisions because they're using level 2. Yes, they're going to be fake outs from time to time. There is some degree still of order spoofing, which is illegal, but some people still do it. Market maker manipulation, stuff like that. I mean, some of that stuff does still exist. And it's pretty easy to visualize when it's happening, but you can still get fooled by it. When it first happens on a stock, because you train yourself to take those quotes seriously. So, but in any case, I do feel that it gives me an edge, especially in fast-moving markets, because the way, and I think tape reading is one of my edges, because it allows me to really visualize the strength and the rate of change and the momentum of a stock. So I feel like I trade better with it. Next episode, tire kickers. I don't know. It's a side project. It's fun. I like doing car videos. When I have some time, I do them. And life has been busy, so I haven't gotten to it in a while. But the cool thing about all the videos I've done is, the video on 1961 Volkswagen bus. I mean, that's a video that can be watched for forever. It's not like I'm doing a video on like a 2001, Hyundai Elantra or something, like where people, I'm doing a video on a car that's kind of so legendary that people will keep watching it. So even if I'm only adding a couple of videos a year, I try to focus on cars that are really rare and interesting and that people will keep watching and be interested in. Okay, so Michael, when it comes to entries, what are you focusing your attention on the most? Well, to be honest, it is level 2 for determining the exact entry and whether or not I'm going to buy. If I pull it up, the chart could look great. I pull it up and we have a 75-cent spread. Well, that's not going to work. Now, you would have seen that on level 1, but you look at the level 2, you see that, and I'm like, no, I'm not going to buy that. I can't trust it. Spread's too big. So the chart can look great, and then you look at the level 2, and then that gives you a big red flag. So ultimately, level 2 is where I make the final call, but the chart is certainly important, the 1 minute. Do you think day traders should never average down on losing trades? Well, I do average down on losing trades, and I do it within reason. I don't hold trades overnight. I don't do that. But I have certainly traded my way out of a losing trade more times than I could possibly count. I buy a stock at 750, it flushes to 7, I double at 7, it pops back up to 725 on a dead cat bounce kind of thing, I get out break even. That's not uncommon. Now, if I was already in full size at 750, I'm not going to be able to afford to add. And I set hard limits on my account where I can't take more than a certain number of shares, and I can't be down more than a certain amount of money. So if I hit any of those levels, I'm cut off immediately. Would you say? Yeah, I put another one on for you. Yeah. I did. Yep, another one came on. So let's check on Instagram for some questions. Thanks, by the way, for those tuning in. And if you guys enjoy this Q&A session, hit the thumbs up, throw some questions down below. Right now I'm catching up on a bunch of questions that people posted earlier. So thank you guys for that. People with specific questions about the classes and things like that, you can email team@warriortrading.com, and we're happy to answer those for you if you have a very specific question. So that's fine. Shoot us an email. Okay, let's see. And I may do another QA session tomorrow, depending on what it seems like we get from feedback on this one today. All right, so let's go here. All right, so now that you've become a successful trader, what are your goals for the rest of 2022? Well, so I'm at a point where I've been a successful trader for a long time. So at this point, I don't really care that much about the rest of 22. Like this is like the next half mile in a 50-mile marathon. Like I don't care. The rest of 22 could be great or could be terrible, and at the end of the day, it doesn't really matter that much. It's just one tiny leg in the marathon, and the marathon is that this is my career, and I'm going to be doing this for a long time. I've been doing it for a long time. I'm going to keep doing it for a long time. So, ultimately, a sort of minimum goal for me is to be green each year. I don't want to have red years. I don't mind having red months, but I don't want to have red years. So I do have to be a little bit more conservative, maybe than some traders who are willing to kind of let it ride for big wins, but don't mind having a red year. I want to be consistently green. I try to keep the mindset of trading for income, trading to pay my bills, and living within my means of the income that I make as a trader. So, if I'm figuring I'm going to be making $30,000 to $50,000 a month fairly consistently, but in a hot market, anywhere from $100,000 to $200,000 a month, that's great. Right now, I'm kind of settled into, I'm sitting at, we're 6 months into the year right now, and I'm at 500,000 in gross profit, 500 and I don't know what it is, but so I'd like to get over $1 million by the end of the year in gross profit, maybe 1.2 or something like that. That'd be nice. And, that would be fine. So that's what I'm looking towards. I'm obviously mindful and aware of the fact that we're certainly in a bear market. So I'm adjusting my expectations based on that. But I also know that when we bottom out and we start to rally off the low, that from the moment that we start rallying off the low, it's like a bull market. Now, the market may still be down 30% or 20% or 40% off the high, but the second we start rallying, we're stair-stepping up, that is just as if it's a bull market. So really, it's not till we get back to all-time highs that I can start doing well. I'll be doing really well, as soon as we start to bounce off the low, which, for all I know, could be later this summer or in the fall, but it could also be longer. And I'm fine with it being longer because I have the long game view on this, that right now, if this ends up being a full year bear market, or ends up that we do go into a recession and we're in a bear market for 18, 24 months, that's fine. I really don't care. I'll get through it. Am I going to make a little bit less money? Sure. Would I maybe prefer we're in a bear market or a bull market? Sure. But if I make money in a bull market, then either way, there's going to be a bear market in the future. So I'm kind of like, let's just get it out of the way. And then when we get on the other side and open up in the next bull market, maybe we go for another 10 years in a bull market, the way we did for, 2010 to 2022, basically. So that's kind of my feeling on it. All right, so where do I find the conviction to hold on to a trade and not just take the small winner, assuming it meets all the criteria? Low float, high relative volume, gapping up, good percentage, news catalyst. So I find a lot of time I let it work out. Oh, I see. You let it work. You're like, I'm going to let this thing work. It looks good. And the next thing you know, you're getting stopped out. Man, I know. I like have the same thing. And then the one that you like take the profit off like immediately is the one that ends up going like $3 a share and you feel like an idiot. I know, man. Like I do the same thing. And here's my opinion on it. If it's really strong, I'll get back in. And I'll just keep hitting base hit after base hit after base hit. And if I can get myself up to 2,500 a day, 5,000 a day, $5,000 a day is $1 million a year. So my goal is sort of, $5,000 a day average. That's where I'd like to be at. This year I've been averaging 4,600 a day. So I'm a little below that. And that's in gross profit, but not that far off of it. So, I'm not trying to set outrageous goals. I can hit 5,000 with like 4 or 5 good base hits of $1,000 each. And that's kind of what I do. So I'm trading in the home run for more chances at a good base hit. And I'm okay with that. And part of being in a bear market right now means being willing to walk away green earlier and just be like, thank goodness I'm green. I'm the guy in this market who's green. Should I day trade 3 times a week until I get over 25K? Or should I wait until I can put enough money together to day trade freely? You know what I would do if I were you, Alan, is I would set up a cash account with TD Ameritrade, maybe TD Ameritrade, for instance. I don't know how far below PDT you are. If you're at like $5,000 or you're at 15 or 18. If I was at 15 or 18, yeah, maybe I would just trade 3 times a day or 3 times a week. And I would sort of plan to do that for like the next few months to try to get myself up to 25K, because I'd be like, I'm pretty close. But if you're at like 5 or 6 or 7,000, you're a ways away. So if I was in that place, I'd probably set up a cash account and trade with half of it every day. That way you can trade daily, because experience is important. If you just wait until you have enough money to be at 25K, why would you do that? You're missing out on all the opportunity to gain experience between now and then. You need that experience. That's what's going to give you the confidence to trade well. And, so you got to be practicing. So I would try to set yourself up to practice more with small size, more experience. Gains will be smaller, but it keeps you in there. Did you ever think you wouldn't be good enough or smart enough to be a successful trader? Yes. In 2007, it's like 2007, maybe early 2008. I was living in New York City and actually tried to apply for internships or like any job I could find at like hedge funds. And, I was finishing my college degree and I was focusing on architecture and, that kind of stuff. And so I was also applying for internships with those places. But I was like, you know what? I've been interested in the market since I was young. I'm in New York City. Let's just give it a try. Like, why not? You know, like, hey, maybe I'll do an unpaid internship. I'll be someone's like coffee boy or whatever, run and get coffee, get my foot in the door. And none of the places called me back, but one did. And they just asked me all these questions of like, you know, did you go to school for finance? And the answer was no. And, you know, do you have any experience in finance? And the answer was no. And they were just like, does your family have any experience? Like, in other words, who do you know? And it was just like, no. So they're like, yeah, no. So at that point I was like, well, I'm never going to, that was a dream, you know, that maybe someday I'd work on Wall Street and make money in the stock market, but that's just not going to happen for me. I didn't, you know, it's too late. I didn't go to school for that, and, you know, blah, 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 blah. So I just sort of assumed that wasn't going to happen for me, and I did the architecture stuff. And then when I moved back up to Vermont in 2009, or it was around there, it's 2009, and then I bought that farmhouse in 2010. At that point, I kind of settled in that I was going to be living in Vermont, and that's when I started getting focused on trying to make money working from home. And they didn't have OnlyFans then, so I had no choice but to day trade. But, you know, being 4'11" and with this physique, I would have killed it. I would have been number one on OnlyFans, obviously. So anyways, I went with the available options at the time, which day trading seemed to be the most obvious, but also because my lens was like, I was interested in the market still. So that's what I did. And then as I was learning, I was like, wow, I'm really not very good at this. This is a lot harder than it looks. But I saw other people that were succeeding at it, and I realized that they're not like geniuses. They just have learned. It's like solving a Rubik's Cube or whatever. Like they've just learned the trick to it. And I think I can learn it too. I just have to really set my mind to it. And then, you know, I started making money, but I also was losing money because I wasn't able to be disciplined, and I was emotional. And so it took me hitting rock bottom before I was like, you know, I'm never going to really succeed at this unless I can be disciplined. All right, let's answer some questions from YouTube.
Are you sitting on something?
Yeah, I'm doing something still.
No, I'm sitting on something.
Am I sitting on something?
Yeah.
Just the chair.
No, I'm sitting on. No. I do flip up just to see.
You want me to get my butt up just to see? Okay. I assure you that I'm not sitting on anything other than the chair. See?
Yeah, but I want to see if the draw board is.
Oh, the drawing board? It's right here. There you go. Oops. Okay. All right. So let's see. So we have a question here from Neil. One question is: taking the initial plunge and starting with 20,000 be enough to dip your feet in the water? Yeah, it's more than enough. You don't need that much, really. 27,000, just above PDT, would be fine. What causes a halt to break prematurely and become a false halt? Imbalance to the sell side or buy side. So if a stock is halting up, the bid, people have to be bidding up.
Can you put on the other one?
Yeah, I will. It's going to start automatically. People have to be bidding up above the halt price. And if all of a sudden people stop bidding there because someone sells into them or people pull their bids, then the bid drops below the halt threshold and it'll resume trading. So a halt has to, in order for a stock to be halted, it has to be pinned above the threshold for 15 seconds, and then it'll halt for 5 minutes. Zach's question: I know high volume and look for an influx of green on the tape, important level 2. But what are things I should be agile and alert to while trading off the level 2? So, I mean, candlestick formation is important. You know, if we have a big, huge topping tail candle, you know, a few candles back, that's going to be a potential problem. So, you know, we want to look at candlesticks. We want to look at volume bars. If there's some big selling, that's something to be cautious of. You know, high volume sell candles, light volume buy candles, that's a risk as well. So those are a couple. All right. Let's see. How do I improve my trading accuracy? Focus on A-quality setups. Focus on best quality setups. Keep doing that. Just keep focusing on best quality setups. And, if you end up doing that for a period of time and, you realize, okay, well, I'm still not doing well enough, then you have to go back to the drawing board and you got to study a little bit more. You got to figure out entries and, how to anticipate entries and just study more and look at what other people are doing. I'm someone who is a profitable trader. Obviously, you guys know this. I am putting out my blueprint, literally my entire strategy. And I do this, of course, for traders that are part of our community, for Warrior Pro traders and Warrior Starter students as they go through that class. So I'm putting my strategy out there that you can learn. And it doesn't mean that you'll be able to trade it profitably, but it, to me, makes more sense to learn something that someone else has proven is actually working than to just start from nothing at all. This is like, think about how to start a fire without a lighter, with 2 pieces of wood. If you study the way people do it, there's techniques that people have for starting fires. And it probably makes sense to start with one of those techniques. I'll just rub 2 sticks together and, that might work. But you might also realize it's actually kind of tricky until you've got a technique down. So I actually took my first trade. I took my first paper trade when I was 13 years old. So that was when I first started paper trading. I kid you not. 13 years old. This was in 1998, 1999. And some of the first stocks that we were trading, this was part of a school program. The teacher was really adamant about us learning about the financial market. Thank goodness. And it was in the middle of the dot-com bubble. And so, Apple was trading and Yahoo was trading, I think, and all these companies. So anyways, I traded a little bit then. And then I traded with real money when I was 16, 17 years old. And then I started trading. I took a period of time off. I was like, okay, this is I wasn't able to make real money. And then I took some time off, and I kind of missed a really good window in there from 2004 to 2006 when the dot-com bubble had burst, but we were rallying back up. And then 2008, 2009, market dropped, and that's when I was getting back into the market, getting focused. And then 2010, 11, 12, we had that rally, 13, 14, 15, 16. And then 2017 was when I started my small account challenge, which is, I had already been trading and made money, but I started that small account challenge in 17, and I'm still trading in that today. Best offshore broker. Well, most traders, including me, I have an account with CMEG. It's where a lot of traders are trading, and it's good. I like their platform. It's, you kind of work with what you have. You don't have the, deposit insurance the way you would with the U.S. broker and stuff like that. So you do have to be a little bit more careful. But that's the one that I've used and still have an account with. So question there from Potter, is this recession bear market still a good place for a beginner to day trader to start? So I would actually take the opinion that learning in a bear market is probably one of the best places to start because it's going to force you to be very disciplined. And while you're starting, you should be in a simulator anyways. So practice in the simulator, and then hopefully by the time you've put in 6 months or a year in the simulator, we're getting close to the other side of the bear market, and we're going to be coming into a bull market, which means you're getting ready to hit the ground in a bull market, ready to run. And you have a head start against people who come in a year and a half from now when the market's heating back up, or whenever it is, 6 months from now, whenever it is. When the market's heating back up and people come in, well, what they should do is trade a simulator for 6 months. And listen, you might not believe this, but there are, thousands of traders, however many, that blew up their accounts even trading long during a bull market. Because they don't have discipline, they didn't follow the rules of the strategy, they were just, shooting from the hip. So, if you can make money in a bear market, you're setting a really strong foundation. All right. How do I fight analysis paralysis? Too many indicators, right? Too many indicators on the chart, conflicting signals. I actually had a good meme for this. This was it right here. This is how it feels when you're day trading. The red light, green light, red light, green light, red light, green light. I was prepared for this question. I knew this kind of question would come. So, yeah, I mean, I don't disagree. If you have that many indicators on your chart, you're going to have conflicting signals. Going back to basics is important. And for me, basics is price action. And how do you visualize price action? You visualize it with candlesticks. You visualize it with volume bars. And you can use certain indicators to help provide context for price action, like the volume weighted average price, moving averages. MACD is moving averages, whether they're converging or diverging. That can be helpful. Some people like RSI. It's an oscillator. So MACD is also an oscillator, goes up and down. So some oscillators could be helpful sometimes. They can get a little busy though. Stochastics is one that's like really choppy. So you just don't want to overdo it, because there are good indicators out there, but the fact is, unless you use that indicator for every single trade, it's not really valuable. You have to use it for every single trade. If you're only using it for a couple of trades, then you're using it inconsistently. So you need to be able to use it on every trade. And by the way, I'm mostly answering questions that people posted earlier on the video I posted on YouTube. So I'm going through those first. And then what I'll probably do is, because I know I'm going to miss some questions that people have posted here on the live broadcast, what I'll probably do is I'll post another video maybe tomorrow, and I'll let you know what time I'm going to go live, and then you can queue up your questions ahead of time, the way these folks did. Fibonacci retracement. I don't use Fibonacci retracement. Would love for you to go over volume again. Getting hard. I'm concerned about being hard to fill 20,000 shares. Really depends. Totally depends. Sometimes you can fill just like that. Other times you get a lot of slippage. Liquidity, but also it's not just total volume. I mean, it's the market makers and how much liquidity they're providing. Do you have sellers on the ask to accommodate the buying of that kind of quantity? Do you have buyers on the bid to support the selling of that kind of quantity? And sometimes you do, and sometimes you don't. You can visualize it usually pretty well in the level 2, whether or not you have it. What advice for for taxes? I actually do use a big tax company, but I used a small tax company for forever, and it's not complicated. I mean, so many people day trade. Short-term capital gains are not complicated for them at all. I don't know what's going on here. Hang on one second. I gotta go in like 15 minutes, by the way. But I can come on tomorrow if you guys, if you want. For those that tuned in, thank you for tuning in. I hope you hit the thumbs up. I do have links here showing the 40% off that we've got going on at Warrior. I just want to remind everyone that we've got this 4th of July sale going on right now. So check it out. If you want to check it out, do it. If you're not interested, no worries. But just so you know, we've got this going on right now. And it's going to end we've got a timer here of when the sale will end. So you've got like 48 hours. It's going to end 2 days and 7 hours, 55 hours. Okay. Let's see. So, question over here on Instagram. Let's see. I remember in your videos on the level 2, you suggest we determine a valid entry point. My question is, should the level 2 be used to determine where to exit to, or is that purely based on chart? No, I mean, I am still using level 2 for exits. So the thing is, if I'm trading a stock and it goes up and then it hesitates a little bit and we have a micro pullback, if I'm already green, I'll hold through the pullback. I may even add there for the next leg up. I'm thinking stocks hitting the scanners. Oh, sorry. Stocks are hitting the scanners. People are going to be buying it. So, I may still trade it and still be adding to it. But at a certain point, if we're coming up to psychological resistance, $0.50, whole dollar, or I'm already up quite a lot, I may start to take a little profit off the table. I don't really want to wait until, the stock is no longer going up and is actually starting to go back down to take anything off the table. because then you're selling as it's dropping. You'd rather take profit as it's still going up. So I can get in, take some profit off, get back in, take some profit off, it kind of et cetera like that. This one is on right now. Yeah, this one's on. Yeah. So let's see. Thanks, Matthew, for the question. I hope that's helpful. Is there a way to know how many buyers and sellers there are in each candlestick? I think that there are some indicators that break the candlestick up to green volume and buy volume. It's showing the orders that went through on the ask versus the bid. I don't know which platforms offer that. Let's talk about strategy adjustment in this bear market, taking dips off support versus breakouts. Yeah, dips off support are great. Then adding into the breakout, then profit through the breakout. I mean, all of this, by the way, I talked about during the bear market strategy study session 2 weeks ago. And I can host make a replay of that available for those that missed it. I'll do that maybe next week or something. Do I miss Trump? I miss him a lot. Biden is destroying everything. Well, he doesn't know how to ride a bicycle. That's the first red flag. But at the same time, riding a bike is hard. So I don't want to give him too much of a hard time on that. We had a nice run in the market during the Trump era, and I'll look forward to when things rally back up. I mean, we also had a good year last year, though, which was, first year of Democrats in office. But I think that, it's to the extent that politics affects the financial markets, it's valid topic, but it's also, it's a can of worms. So it's a big topic. I trade equity, not options. Simulator stats are good. Okay, 53% win rate, good profit loss ratio. Okay. So I would say, Mitch, starting it out with small size, 25, 50 shares, you're going to learn a lot. You're going to realize that trading in the simulator is helpful, but real money is different, and it's hard to simulate emotion. So I personally would rather kind of, cut my teeth on a small account where the stakes are a little lower. You might blow up your first account, and you're going to learn a lot from it. So let it happen. Just go through that process and be prepared that you may have to refund it. Ultimately, you're going to have a better commission rate if you're able to trade with an above PDT account, especially in the U.S., free commission brokers. So just be aware of that. How long do bear markets typically last before we see change in sentiment? So I think the average bear market drawdown is around 25%. The market's already drawn down 20%. So in terms of percentage loss off the top, we're already mostly to the limit of a typical bear market, but some are bigger than others. 2008, we saw 50% down. In 2001, with the dot-com bubble, it was like 50% as well. Of course, the Great Depression was like 80%, but that was very different, and the Great Recession was also very different. So I don't see the reasons right now that this is going to be as bad of a recession as the Great Recession. This is not a financial crisis that I see. It's not a crisis of the financial system. It's not. We don't have the same subprime housing loans that we had at that time. So I think that the Fed wants to. I mean, they're starting a recession. They are trying to slow down the economy to stop and slow down inflation, right? The only way to slow down inflation is to increase interest rates and therefore decrease demand for certain things. People aren't going to be buying the same price house or as many houses when interest rates are 5% versus when they're 3%, 2%, 2.5%. So increasing interest rates slows down demand. If they could just instantly increase supply, that'd be great, but you can't do that. You can't just instantly increase supply of homes. So I think that they're going to increase the interest rate to slow down the economy, bring down inflation. And then, what wouldn't surprise me, and we'll see what happens, but what wouldn't surprise me is that once we see it slow down, if then they pull a different lever to try to stimulate the stock market and possibly stimulate the economy to sort of ramp back up. There's big levers that they can pull both ways. They're trying to slow down the market right now. Don't fight the Fed. They're trying to slow it down. I mean, they're not trying to slow down the stock market necessarily, but they're slowing down the economy to, cut off inflation. So how long will this last? I think realistically, we need to see some of the numbers on inflation turn around. I mean, that's what we need to see. Otherwise, the Fed's going to keep increasing interest rates, and we're going to keep seeing the market pulling back and softening. So, that could happen sooner, but it may take longer. Maybe by the end of the summer, we'll see inflation softening. Given the cost of oil and driving, travel might be less this summer. It costs more to travel places, so we might see slow down on some of those things, but time will tell. Let's see. How do I overcome a thing where I have a few good small green days and I have a big red day? Yep, so that's the patterns. A few small good green days and a huge red day. So many of us have gone through that. 4 steps forward, then 5 steps back. And that's part of learning. That really is part of the process. That's part of the journey. I don't think that there's probably any traders that haven't gone through that, who have eventually made it to the other side. 2 steps forward, 4 steps back. In those steps forward, you are proving that you know what you're doing. In the steps back, you might be mismanaging risk. You might be getting a little emotional. And with experience, you're going to get better at having those days be fewer and further between. I have done back testing, and I don't really think it's super helpful, because the problem with back testing is that you end up developing a strategy that succeeds with a certain set of back test data, but then forward testing it and running it forward, it doesn't perform well. Then 6 months later, the back test for the last 6 months isn't good. So you change it again. You make it good to match the puzzle that it's fitting back into, which is the old data. So honestly, the people that are able to back test strategies with confidence are like, MIT, Harvard graduates, mathematicians, people that are the best of the best working at these quant funds, and they're way, way, way smarter than I'll ever be. So I'm not going to fool myself into thinking that I could do that kind of trading. Let's see. All right. So we'll do a couple more minutes here. Reduce slippage at minimum on your entries and exits. You can reduce slippage through order routing. If you're familiar with different order routing, that's one of the ways that I reduce slippage. I'm not really sure on that question. And the tape says 5x70. I haven't seen a tape show that, but I've seen that, of course, maybe on the level 2, 500 by 7,000. I'm not sure. Tape reading. If you check out some of the videos I've done on level 2, those get into a good amount of detail on that. If I buy a stock and it fails immediately, I usually just bail out. I just cut it. Sometimes I'll average down if I'm immediately deep red, just to catch a bounce coming back up off short covering, but usually I would just try to cut it. Getting over hesitancy in a trade, usually trading with smaller size, makes it easier to pull the trigger. As a beginner, I get into the trade too soon when the market opens, then I get out quick for fear. That's emotional, right? That's emotional stuff. So you've got to slow down. Often with smaller size, you can reduce those emotional impulses. How do I confirm micro pullback will make a new high? If the stock is very strong, we've got good volume profile, the float and the price are right, the daily chart's good, it's an obvious stock, the first pullback will continue more often than not. One of the biggest issues is that the stock's not obvious enough. The pullback works because other traders are seeing it and they want to get in this stock. That's why the pullback works. So if other people aren't seeing it, the pullback won't work well. Can you scan for gappers and thinkorswim? I'm not sure. I haven't tried. Trying to buy break of $0.50, whole dollar. What are warning signs that it won't break? If it's really extended on the 5-minute, you could have a false breakout at that level. Futures, the thing is, it's interesting. There's just not as much interest in the futures market. You're right that futures, they don't have PDT rule, but there just isn't enough interest. We had at one point, we had a futures chat room at Warrior with a futures class and futures traders, and didn't attract any interest. I mean, people just didn't care. there was like, just, I don't know. People aren't interested. People don't care about corn and soybeans, stuff like that. Don't care. It's not as exciting. What do you put down for occupational job on applications? It depends. As a day trader, you could put down, you'd probably put down self-employed. You could say retired. Depends on how old you are. There's a lot of market makers. Other what? Another one will come on in a second. For small accounts with 2,000, 4 times margin, is it better to trade with the available 10,000 or 8,000? So this is risky stuff. Trading on leverage, on borrowed money is risky. So you've got to be very, very quick, and you've got to have the confidence that you know what you're doing. And as a beginner trader, I don't know if that's a good idea. You need to have a lot of historical data in sim, and you should start with smaller size with real money. And then once you've proven success, then you'll probably want to start borrowing and using some of that leverage to trade with. And I think that you'll know when the time is right. But don't do that too soon. When trading, is it critical to have level 2? I traded for a year without level 2 and went in the red. Well, there's people that trade without level 2 and do well, but I use it and I find that it's important. What is the max potential of daily gain from day trading? My best day was $475,000. Disclaimer, my results are not typical. Trading is risky. Most beginner traders lose money. So there's no guarantee you'll find that type of success by any means. But there's traders out there who have made over $1 million in one day. So, depends on a number of factors. Risk tolerance, account size, experience. Started in 2020, but I'd like to start day trading. What would you suggest to do first? So you're welcome, of course, to join us if you'd like. Technology, the basic is trading simulator to get started, scanner, so you find stocks that are moving, and something educational, so you know what you're doing. So you have a strategy to work with, some type of blueprint, whether it's mine or someone else's, but something that you can base that this is how I'm going to approach the market. And then track your metrics and see how you do. And just commit yourself to doing it for a period of time. It sounds easy. It's easier said than done. I understand. How can you see if a stock is thickly or thinly traded? It's pretty easy. It's just the number of buyers and sellers and the spread. If you've got a 1 cent spread and 10 bids and 10 offers, you've got a very thickly traded stock. How large of a stop should I set when scalp trading? Having a tight stop doesn't allow my trade to breathe. Right, that's true. You do want to give it enough room, but at the same time, the best trades work pretty much right away, especially if you're scalp trading. So, 8 to 12 cents could be a reasonable stop. If that stops you out, then your entry wasn't really the right one for that type of trade. Yes, Lightspeed's a good broker. I'm happy with them. Can anyone rely on trading to be profitable in career? Not anyone. Some people can. Most people can't. Does news truly have a big impact on the price action? Yes, it's fundamental news, but what often happens is you get exaggerated moves to the upside and downside, and then a bit of a correction before more of a trend takes place. Relative volume, average relative volume. So I think I answered this question a little bit earlier, so I'll skip it. In reality, how can one start to live off day trading with zero in knowledge and funds? You can't. With zero in knowledge and zero in funds, you can't. Period. You need to start with probably knowledge first, and then funds second. But you cannot start day trading with zero money. You can't actually day trade. You can't even most likely open a simulated trading account because simulated trading costs market data. So it costs like $100 a month. If you use TD Ameritrade, you get a free account, but only if you deposit like $500 in first. You can absorb knowledge fairly for free on YouTube with the cost of an internet service on your phone or whatever. So you could do that. And that may be the best place to start. Why don't you accept outside capital? So I don't run a fund. I don't run a hedge fund. I'm just a trader with my own account. And so I don't accept outside capital, so I don't invest on with other people's money. All right, so we got all of the YouTube questions done. There were some more. Jack on Instagram, I notice when you take a loss, your losers are significantly smaller than your winners. Well, you might think that, but of course, as it turns out, based on my metrics, my average losers are bigger than my average winners. And it's because occasionally I do get caught with a fairly big loss, as you know, you've seen. So, but the reason they're fairly similar, I guess, is because, I have some that get bigger because I take like a 50-cent loss with full size. And I don't usually take a 50-cent winner with full size because usually I'm scaling out on the way up. And that's kind of the biggest problem. You scale out usually on your winners going up, but your losers, you hold the full thing until you get, hit. That's kind of the problem for me. That's why my profit loss ratio isn't as good as it could be. And if you hit your monthly goal in the first week of the month, would you keep trading for the next 3 weeks and risk losing it? I would absolutely keep trading. I would try to avoid risking losing it by being a bit more conservative. But remember, a month is just one, quarter mile in this big marathon of day trading. So yes, it's nice to finish each month green, but being super aggressive on the first week of the month and then being conservative for the next 3 and doing that 12 months in a row, wouldn't it make more sense to be conservative the first month of the year and then aggressive the whole middle of the year? You know what I mean? What difference does 1 month really have? Psychological, it makes some difference, but it's kind of arbitrary. So I definitely wouldn't stop just because I was green at the first week. I'm going to be in the market every day. All right, and with that, I've answered all the questions that were on Instagram posted there and all the questions that were posted earlier on YouTube. And we did get a good number of questions that came in during the live broadcast, which I haven't been able to hit too many of them as we've been going through because I was getting those ones first. But if you'd like, I can come in and do another session tomorrow. So feel free to leave comments. Don't leave them in the live chat because that's going to be hard for me to see them. But I'll make a video maybe tomorrow morning if I'm going to go live tomorrow afternoon, and you can post questions on that video, and I'll prioritize those ones first. All right, so thank you guys for tuning in, and as you guys can see, and reminder, 4th of July sales are underway, so you're welcome to use those coupon codes, use them or lose them. They're going to be expiring on, let's see, the 5th, so they'll be going tomorrow, the 4th, and then they'll expire on Tuesday, July 5th. So make sure you use them if you're thinking about it, and I'll see you guys obviously Tuesday morning for the morning show, but I'll probably see you back here maybe tomorrow for another QA session. I'll look at the comments on this video later tonight and see if there's been enough engagement and stuff like that, but that's the game plan. All right, thanks so much. I'll see you guys first thing Tuesday morning at the least, but probably see you tomorrow as well.